What if I told you there are 10 timeless rules that could make or break your investing journey? These aren't get-rich-quick secrets. They're the core principles that have guided the world's best investors for decades. My mission is to make personal finance simple and actionable for you. These 10 commandments are your North Star, helping you avoid common pitfalls and build real, lasting wealth. Whether you're starting with $100 or already investing, you'll find value here. Grab a coffee, get comfortable, and let's dive into the first and most important commandment. Commandment number 1, the cornerstone of sound investing. Thou shalt have a plan. A comprehensive, well-thought-out plan. This isn't just a suggestion, it's the bedrock upon which all successful investment strategies are built. Investing without a plan is like driving with no destination. You're setting off on a journey with no clear idea of where you want to go, or how to get there. And inevitably, you'll end up lost, frustrated, and potentially further away from your goals than when you started. Your plan is your roadmap, your GPS, your guiding star in the often turbulent world of finance. It clearly defines your goals, both short-term and long-term, giving you something concrete to aim for. It establishes your timeline, setting realistic deadlines and milestones to keep you on track, and most importantly, it outlines your strategy, the specific steps you'll take to achieve your financial aspirations. Are you investing for a house down payment in 3 years, a significant but relatively short-term objective? Or are you planning for retirement in 30, 35, or even 40 years, a much longer horizon requiring a different perspective? Each goal, with its unique time frame and risk profile, needs a different approach, a tailored strategy designed for success. Short-term goals, where preserving your initial investment is paramount, require safety and stability, while long-term goals, with their extended time horizon, can handle more risk in pursuit of potentially higher returns. For example, Alex wants to buy a house in 3 years, a fantastic goal, but one that demands a cautious approach. Therefore, he should focus on preserving capital, minimizing the risk of losing his hard-earned savings. He shouldn't be chasing big gains with speculative investments that could jeopardize his down payment. Now consider Ben, who is investing for retirement in 35 years, a distant but crucial milestone. He can afford to ride out the inevitable market swings, the ups and downs that are a natural part of the investment landscape. Ben can afford to focus on growth, seeking investments that have the potential to generate significant returns over the long term. Without a plan, you'll panic in downturns, making emotional decisions that can derail your progress. Or, you might take unnecessary risks, lured by the promise of quick riches, only to suffer devastating losses. Your plan clearly sets your risk tolerance, helping you understand how much volatility you can comfortably handle. It guides your asset allocation, ensuring that your portfolio is diversified across different asset classes to manage risk effectively. Ultimately, your plan keeps you focused on what truly matters, your goals, your dreams, and your financial future. So, before you invest a single dollar, take the time to write out your plan, document it, refine it, and make it your own. It's the best investment you'll ever make, an investment in your own financial well-being. Don't skip this crucial step. It's tempting to jump right in, but resist the urge. Your future self, the one enjoying a comfortable retirement or achieving those long-term dreams, will thank you profusely. With that foundational principle firmly in place, let's move on to the next commandment, another essential element of successful investing. Commandment 2, thou shalt not time the market. Predicting market highs and lows sounds great, but even the pros can't do it consistently. Trying to time the market usually means buying high out of FOMO and selling low out of fear. Studies show missing just a few of the market's best days can devastate your returns. The solution? Stay invested for the long haul. Time in the market beats timing the market, every time. Be a long-term investor, not a short-term gambler. Commandment 3, thou shalt embrace diversification. Don't put all your eggs in one basket. Spread your investments across different companies, sectors, and asset classes. If one investment tanks, others can help balance things out. Diversification means owning a mixed tech, healthcare, consumer goods, maybe even bonds or real estate. The easiest way? Low-cost index funds or ETFs. They give you instant diversification in a single purchase. No single stock, no matter how promising, is worth betting everything on. Diversification won't guarantee gains, but it's your best defense against risk. Protect your portfolio from surprises. Make diversification a rule, not an afterthought. It's simple, effective, and proven. Let's keep going. Commandment 4. Thou shalt understand what you own. Don't invest in something just because it's trending or someone else is hyped about it. Know what the company does, how it makes money, and why you believe in its future. If you can't explain it in a sentence, don't buy it. This goes for stocks, funds, and even crypto. Blindly following the crowd leads to disaster. Remember the countless stories of people losing everything on hype. Do your homework, read the basics, and invest with conviction. When you understand your investments, you won't panic when prices drop. Knowledge is your shield in volatile markets. Invest in what you truly understand. Commandment number 5. A principle that stands the test of time. Thou shalt invest for the long term. This isn't just a suggestion. It's a cornerstone of successful wealth building. It's about adopting a mindset that transcends short-term gains and embraces the power of time. Think of investing like planting a tree, a tiny seed with enormous potential. It takes time to grow, nurtured by consistent effort and patience, but the rewards multiply exponentially as the years pass. Imagine that sapling growing into a mighty oak, providing shade and bearing fruit for generations. That's the power of long-term investing. Compounding is the secret, the engine that drives long-term growth. It's a beautiful cycle where your money earns returns, and those returns in turn earn even more returns. It's like a snowball rolling down a hill, gathering momentum and size as it goes. The biggest gains come after years, not days. True wealth isn't built overnight. It's the result of consistent, patient investing over the long haul. Day trading and chasing quick wins uproot your progress. It's like constantly digging up that sapling to see if it's growing. You'll only hinder its development. Ignore daily noise, the constant barrage of market fluctuations and news headlines. Instead, focus on decades of growth. Zoom out and see the bigger picture, the long-term trajectory of your investments. Market downturns, those inevitable dips and corrections, they're opportunities to buy more, not reasons to panic and sell. Think of them as sales on your favorite stocks, a chance to accumulate more at a lower price. Shift your mindset from get-rich-quick schemes and fleeting trends to build wealth steadily through consistent long-term investing. Patience and discipline are your greatest allies. They're the tools that will help you stay the course even when the market gets rocky. The longer you stay invested, the bigger your rewards. The more time you give your investments to grow, the more significant the impact of compounding will be. Let your investments work for you over time, quietly and consistently building wealth while you focus on other aspects of your life. That's how real wealth is built, not through fleeting moments of luck, but through the power of long-term investing. Commandment 6. Thou shalt automate thy investments. Automation removes emotion and builds consistency. Use dollar-cost averaging. Invest a set amount at regular intervals, no matter what the market's doing. Set up automatic transfers to your investment account. Set it and forget it. When the market is down, you buy more shares. When it's up, you buy fewer. This smooths out your purchase price and keeps you disciplined. Automation is like having a workout buddy for your finances. It keeps you on track. Consistency beats perfection. Make investing automatic and watch your wealth grow. Commandment 7. Thou shalt control thy emotions. Fear and greed are the biggest threats to your returns. Greed makes you chase hot stocks. Fear makes you sell in a panic. Don't check your portfolio every day. Focus on your long-term plan. Set a schedule to review your investments like once a quarter. Detach from the daily noise and stick to your strategy. Automation and a solid plan help protect you from emotional decisions. Your brain isn't wired for investing. Build a system that is. Stay calm, stay focused, and let your plan guide you. Commandment number 8, a principle that might not be etched in stone, but is certainly carved into the bedrock of sound financial planning. Thou shalt keep costs low. This isn't just a suggestion, it's a financial imperative. In the world of investing, what you keep is often more important than what you make. Investment fees may seem small, like mere fractions of a percentage point. They're often presented in a way that makes them appear insignificant. But over decades, they can cost you thousands, even hundreds of thousands of dollars. These seemingly small percentages compound over time, silently eroding your potential wealth. Always check the expense ratio on funds and ETFs. This is your first line of defense against excessive fees. The expense ratio is the percentage of your investment that goes towards covering the fund's operating expenses. Even a 1% fee, which might not sound like much, can eat away a huge chunk, a surprisingly large portion, of your returns over time. It's like a slow leak in a tire. You might not notice it immediately, but eventually, it will leave you stranded. Low-cost index funds are your friend. They offer broad market exposure at a fraction of the cost of actively managed funds. Thanks to pioneers like Jack Bogle, the founder of Vanguard, you can invest for pennies on the dollar. It's a revolutionary concept that has democratized investing and made it accessible to everyone. Most high-fee funds, despite their promises of superior returns, don't outperform the market after costs. In fact, many of them underperform, leaving you with less money than if you had simply invested in a low-cost index fund. Control what you can, and one of the most important things you can control is the amount you pay in fees. Keep fees low, and your returns will thank you. It's a simple equation. Lower fees equal higher returns over the long run. Every dollar saved on fees is a dollar that stays in your account, working for you. Is a dollar that compounds for you, growing exponentially over time thanks to the power of compound interest. Don't let fees be the silent killer of your wealth. Be vigilant, be informed, and be proactive in minimizing your investment costs. Choose low-cost investments always. Your future self will thank you for it. Commandment 9. Thou shalt rebalance thy portfolio. Over time, your investments drift from your target mix. Maybe stocks grow faster than bonds. Rebalancing means selling some winners and buying laggards to restore your original allocation. It keeps your risk in check and forces you to buy low, sell high. Once a year is enough for most people. Many robo-advisors can automate this for you. Rebalancing isn't flashy, but it's essential maintenance for your portfolio. Stay disciplined and keep your investments aligned with your plan. Commandment 10. Thou shalt not covet thy neighbor's hot stock tip. Don't chase hype or invest based on rumors from friends, co-workers, or the internet. Remember Pets.com? Hype and hot tips led to disaster and wiped out investors. If you hear about a sure thing, ask why, not how much. Do your own research and stick to your plan. Most hot tips are just noise, not opportunities. Don't let FOMO derail your strategy. Build wealth slowly and steadily, not by gambling on rumors. Trust your process, not someone else's excitement. Protect your future by ignoring the noise. There you have it, the 10 commandments of stock market investing. Use these principles as your foundation, but keep learning and adapting. Read, research, and consider consulting a financial advisor for personalized guidance. If you found this valuable, hit like and subscribe for more on building wealth. Remember, this is for education, not financial advice. Now go start building your future, one smart decision at a time.